Welcome to the InvestSense market commentary for the second week of June 2025. An overall pretty good week for markets over the last 5 days or so, with emerging markets and China especially leading the way, and also the Russell 2000 or U.S small caps also having one of the best weeks for a while. Meanwhile, the rest of the market, reasonably flat in the US and Europe, and Japan and Australia up by a couple of %. So there seems to be an element that markets are sniffing out some kind of a deal, given the discussions that are going on in London. Meanwhile, bond markets, though, as you can see in that bottom panel, showing US 10-year yields a little bit volatile. So first of all, some concerns around growth very early on in the week, or sort of mid last week. But then in the space of a few minutes on Friday, bond yields jumping up again. And there's been quite a lot of polemic around soft auctions, around that recent downgrading by Moody's, and of course, talk about sort of deficit financing, and the spat between Musk and Trump is very much central to that. So a fair amount of noise at the moment, and that's why we took the opportunity to talk to Andrew Hunt very recently, and that's this week's What We're Working On video. And one of the things that caught our eye in relation to Hunt Economics and the work that they've been doing is we spoke about a sort of a fairly esoteric issue in bond markets, and that is the potential demand for bonds being created by these stable coins. And it's something that's sort of been difficult for the market and ourselves to get our arms around what this actually means. But as this chart from the FT shows, this is actually from the BIS, who did a study basically talking about what exactly Andrew was talking about a few months ago, the importance of stable coins with treasuries being used as collateral to back them. And what you can see there is the stable coin market is becoming as big a buyer as, for instance, somewhere like China of US bonds. Now, the other reason for talking to Andrew at this juncture is he's talked for a while about the issuance schedule and how there hasn't been an awful lot of issuance so far, but that's got to ramp up in July. The market knows about this. It's been widely flagged. So in this video, we talk about the implications of that for the bonds that might be in portfolios, but also for the markets as a whole. And he does strike overall, it's fair to say, a note of caution. So suggest you check that out. And otherwise, next week, we'll see how markets are digesting some of this news, and maybe we might have a bit more on a deal between the US and China. But really, one of the big takeaways from that conversation with Andrew was also that this data is exceptionally difficult to interpret because it's all over the place, and traditional metrics of exports, for instance, from China are getting distorted by, for instance, being routed via Africa or Canada, for instance. So we think there's going to be a fair amount to talk about, a fair amount of volatility, but overall a good time to maybe start getting a little bit cautious. Look forward to talking about that next week. Thank you.